If you run a financial planning practice in Australia, professional indemnity insurance is both a regulatory obligation and a fundamental risk management requirement. You are providing advice on matters that have significant and long-term financial consequences for your clients, and the claims environment for financial advice businesses reflects the magnitude of what is at stake when advice goes wrong or is alleged to have gone wrong. Here is what cover financial planning practices need, what it typically costs, and how to approach comparing policies. Professional indemnity insurance is mandatory for Australian financial services licence holders and is the central cover in any financial planning insurance program. It responds to claims arising from your professional work, negligent advice, incorrect product recommendations, failure to adequately disclose conflicts or risks, or breaches of your duties under the Corporations Act and ASIC regulatory guidance. The level of cover required is set by your AFSL conditions and must meet ASIC's minimum requirements, but the appropriate level for your practice should be based on the scale of advice you provide and the funds under your influence. Practices managing significant client investment portfolios carry exposure that can far exceed minimum required levels. Cyber liability insurance is essential for financial planning businesses. You hold sensitive client financial information, portfolio details, superannuation information, and personal data that is highly valuable and subject to significant privacy law obligations. Financial services businesses are a specific target for cyber criminals, and a cyber incident affecting client data creates both regulatory obligations to ASIC and OASIC and significant potential compensation liability. Public liability insurance covers non-clinical injury and property damage on your business premises and during client meetings. Client visits to your offices, events, and seminars all create premises and general liability exposure. Business interruption insurance covers revenue loss if an insured event forces your practice to close. For a financial planning practice with recurring fee clients and regulatory reporting obligations, an unplanned closure creates both revenue disruption and compliance challenges. Fidelity or crime insurance covers your practice against employee theft, fraudulent instructions, and financial crime. For practices managing client funds or executing client investment transactions, Fidelity coverage is an important risk management layer. What does it cost? Financial planning professional indemnity premiums reflect the AFSL regulatory requirements and the specific risk profile of advice provision. Premiums are driven by your funds under management or advice, the types of products you recommend, and your claims history. Cyber liability is an additional and increasingly significant cost. Work with an advisor who specializes in financial services practice insurance. Use the free business insurance finder at Reliable Business Tools to find the right cover for your financial planning practice. Answer a few questions and get matched with relevant options. No obligation.